See, it's a good team.
All right, folks, welcome back. Chart Talk, episode 42. I am Shake, and joined with me on the other side is Bennett. Bennett, I heard we got some shit to give away. Let's tell them about it.
We do. All right, guys. So we got another little giveaway this week. You guys can see this. A little frame poster. We got TE stress ball. We got patches. And then what everyone has been eating these days, little TP. So like last week, we're going to switch up a little bit. We're going to pick the winner next week. All you have to do to enter is like, subscribe, or enter your email in the link in the bio. And we're going to pick someone randomly next week, and the winner will get this little goodie bag.
We picking them on the show?
Yeah, so actually,
Oh, okay.
I got a little duffel. So anyone who likes, comments, subscribes, shares the post on Instagram, those will all count in entries. So I'm gonna, the entries, I'll, cut them out, throw them in this bag, and we'll pick one out, and that person will be the winner. That's how we'll do it.
Easy money.
Yeah, easy as pie. So I think with that, Shake, we can jump into market outlook.
All right, let's jump right in. We're right now in this macro uptrend. It's we're being led up by the NASDAQ. And I'm going to tell you how I'm trading it right now. It's pretty much, you have to buy these dips and then kind of lighten up into the pops like we saw today. So I'm trying to get it up on the chart. It's like, you don't want to be too heavy into, or you want to let some of the load go in the up moves like we're seeing up here into these up moves. I sold a lot of stock today. I still have some if we want to move higher from here, but I'm ready for the pull in to add some stock to the long side. So that's what I've been really doing, just buying dips, selling to the pops, and kind of riding this uptrend. It's been working out pretty well. What about you? What are you thinking?
I think the main thing that we've been talking about for a while, like in the SPY, we know this 270 has been major support. It's held, this last three times, the last time, extremely strong. And we're just in this range. It's 270 to 300. It's been the range that we've been trading in. And the longer we can stay in here, eventually we'll have that move up through 300. Now, on the downside, if we do get back down to 270 again, the more times we continue to get down to support, the more likely it is that it's going to break. Now, if it does break, it's not the world's going to end. It's just that if it does break, we should expect a move to 260, 250, and then to start a new pattern for the next leg up. But we've been seeing a lot of great action to start off this week, you with that AMED.
Heyo.
All right,
Where
so
we go from here?
I think we'll jump into some of the member ideas.
Let's go.
All right, we got David Taylor. He's looking at 8XNX through that high.
39, whatever that is, 38.50. Yeah, it looks good. I mean, today was the day for the stock. I mean, right off the open, that 36 quarter area was the entry. So, I mean, it could continue higher, but today was definitely the best entry for the stock. But, I mean, that thing looks pretty good.
And for the guys watching this live, again, this is the first time we've done this, so spare us if there's any issue with the audio. But if you are following along, if you do pull up TradingView.
I hear we have an echo. Yeah, well, we have 16 microphones on. I'm sorry. We're going to deal with echo. I have 3 software platforms working. I don't know what the hell I'm doing.
Yeah, we're winging it. But again, if you are following along, open up TradingView, pull up a 1-year chart, daily, and you can follow with the names we're looking at. But again, we're this live, we're just purely we're winging it.
This is hilarious. This is a disaster.
Next. Yeah. Let's see. Next, we got the ZTS.
Yeah, I like this flag. No, it's up too much. Yeah, I know what he's talking about. There's 132, 130 area. It could. It's just, it looks kind of like everything else today with this massive gap up. I don't really want to be adding risk when we're opening up 3% in the SPY. So it's like, yeah, it could go higher, but I can't buy it here. I got to wait for a pull-in of some sort. That's probably pretty much going to be the theme we see today.
Yeah, this I'll go over later in Good Trade Bad Tricks. I bought up in this through 125 a couple days ago.
There you go.
Next, we got Roberto's looking at this UNH through 300.
300. Healthcare was weak as hell today. But yeah, that looks good. This is shaping up. Healthcare has been a leader this whole market run. So if it can flag out a little more before that 300, it definitely looks good to me.
All right, and then the last is KO.
Coke, huh? What's
Yeah,
the trade
Coke,
here?
Through 46 verse 43.
I'll give him this little falling wedge here.
Yeah, looks
Yeah, it looks pretty good. I mean, it looks like it's bottomed and it's trying to make that next move higher. Nice falling wedge. Could break higher out of that. I like that.
All right, next we got Martin looking at this RP 66. You zoom out, it's a pretty significant.
Yeah. This RP is a really, really nice level. It just looks like it's out of gas. That's the only thing. It's like, the March lows. March lows is $37, and it's very quickly up to the 65. So to buy 65 in a macro name like this, where it's like you're playing for the bigger picture trade, it's kind of tougher to expect that follow through. So I would like to see this one go sideways for like 2 weeks, and then we'll get involved. But that's that. I'm just waiting more. Want to see more consolidation out of this one.
Mm-hmm. Another one similar is this Twilio. Nicholas looking at TTWO.
Take two or Twilio? Take two or Twilio?
I'm sorry. Take two. I always mess these two up. But yeah, take two.
Yeah, that one's sick.
That's sick, man.
Video game sector's been so hot with the stay-at-home shit. That has a decent little daily flag. I like that one better than that RP personally. Like for now, short term.
Mm-hmm. And let's see. Next we got Kirsten looking at DPZ.
Dominoes.
Through 380.
This needs more sideways. I'm hoping it goes sideways for like 2 more weeks and then looks to take out that 380. But I mean, if it turns around, the trade's still there. Definitely looks good on the radar for sure.
And then lastly, he's looking at his NTNX through that 22 half.
No, I don't like this one. I think this just needs more consolidation. It kind of floated up into the level. And then thirdly, it has earnings May 27th. So a lot of things holding me back. And we just saw some good charts. Focus on those. Don't need to, try for a setup.
Okay. And then he had a question, Shake, for you regarding the 15-minute rule. He asked if you had any recent trades where you took advantage of that and to kind of help explain that strategy.
Shit. Do you have any? I don't have any recent charts where it worked out well. This light, didn't work out well for it. So pretty much what the 15-minute rule is, I mean, the stock is gappy against you probably right around your stop, maybe past your stop. What you want to do is you want to wait that 5, 10, 15-minute open to so the stock puts that low in, that reactionary low of all traders just hitting out because of a gap down. Let that shake those traders out, put that new low in, and then that's where you put your new stop location is below that pivot. That's really it. I don't have any recent examples. Sorry.
Okay. And his second question regarding having a game plan for a stock that gaps up higher than the price you're looking to buy. Like, do you long? Do you still take it?
It depends. It depends on the setup. If it had earnings either last night or this morning, then I'll be inclined to take the setup. But if we're walking into a massive gap up, then I'm less inclined to take the setup. You see how, on a day like today when the SPY gaps up 3% off the open, I have all these alerts set and they're predetermined prices. So because of the gap up, stocks are just going to float higher on small volume, but then we're not going to see that huge volume push in a lot of these names because, they're just kind of floating higher with the market. So when we see something like today, when we see a lot of alerts go off the open at 9:30 like that, I'm usually not going to take any of these alerts because, what happened to the live? We're done?
I lost the feed. We'll just keep going. Right. It's fine.
So we're going to see a lot of these names gap up into, and so that alert triggers. But a lot of times we're not going to see that follow through because the only reason they're moving higher is because they're being dragged with the market. So most times if a stock gaps up into a level with no catalyst, if there's no catalyst, then I'm most likely not taking the trade. If there's a catalyst of some sort, a major upgrade, some, clinical trial news, earnings revisions, things of that nature, they're being added to like the S&P or something like that. Something like that, I'll look to take the trade, but if there's no catalyst, I'm just going to let it go. I didn't buy a thing today.
Okay. All right, next we can jump into a couple of the social media questions, just a few. We got one from a bit_Thomas. He's looking at this BILI through, I guess, the high through 34.
So what these companies are, this is like that JD. This is online commerce for China. So yeah, I mean, these are going nuts right now. We see Alibaba's went nuts today too. Same deal, all the same sector.
And then let's see, next, Tom underscore RZ, he asked, what are our thoughts on NVIDIA's earnings coming up?
I don't really judge earnings hardcore beforehand. I'll look at them after, but I'm never taking stock into earnings, so I don't really care. Like it's just a something I'm not even gonna think about. Whatever I'll look at their earnings after, and if they're good, that'll get me interested. But I'm not gonna be like, hey, they should have good earnings because of this. Let's buy before the report. I'm not gonna trade that way.
100%. Let's see. Next, we got Vishal. He's asking about this HSY through 134.
Oh, that's a nice little setup there. So what I love here is, all right, so this Hershey, they have this obvious support level right here, this 129.50, 130. It comes down to the level, pushes through the level, and immediately finds buy. And it's called a shakeout. So it shook out right at support. So now you have a tight risk entry. If you would enter at yesterday's highs, we'll say 133, with a stop at these new lows, and that's a very tight risk, high probability trade on your hand because the buyers are present.
Mm-hmm. Let's see. And the last idea he's got is this AMAT through 55.
AMAT 55. They had earnings already. Wow, that looks really nice. Yeah, I like this one. What I like is big time earnings day, big time move on earnings. We see this predetermined level, and now it's flagging under the level and we know that they like the earnings. They're buying it up on earnings day. So through that level, this could make a move back to highs. I like that AMAT.
Okay. And then GD's asking us about Carl's, best trade ever, mRNA. He's asking if they find a vaccine, will the stock still rocket and pop and then come back? Then Jake, I won't even let you waste time on this. You're looking at a stock that's up almost 400, 500, 600% in the last 2 months. You've missed this trade. You could not be more late to this name. Our buddy Carl was buying this name below 20 and is selling it up here at 80 and 90. If you're just now coming around to this name trying to buy it up here, you're more than likely to get, you're going to walk into some big losses. No matter if they have a vaccine, if they don't have a vaccine, you're just way too late to that percentage move that the stock has already had. You're just unfortunately way too late to the party.
When something like this happens, there's a lot of belief priced into the stock. So if the stock, if they shit the bed on whatever trial they have or whatever drug, this stock's at $40 so quick, So if you're not catching it on the way up, don't look to buy it, when it's up 600% in 2 months.
Yeah. So with that, Shake, if you want to pull up the email I sent you, for everyone watching, we made one little tweak to the good trade, bad trade. We listened to a lot of you guys' advice, and you guys wanted to see some more of our traders, the trades that they put on themselves, other than just Shake's good trades or bad trades week, as well as mine. So we had some of our members submit some of their good trades for the week that they've had on or have already locked in profits in. So Shake, if you want to pull it up, the first chart we can start with Tom in that DGX.
Hold on a sec. Oh. I got you.
Just let me know when you have it up.
Oh, I got it up.
All right, so you guys can see here, our buddy Tom Van Meter broke down his trade in this DGX, to a T. You can see here in the first little spot in red. This is in the beginning of March. He finds out about the same buddy, tells him that it's going to go to the moon. Does the complete opposite, and then Tom waits for that setup. You can see through 90. We talk about third times a charm is where we look to buy. So we can see towards the middle of March, it runs up to 80, it pulls back, runs up to 90 again, pulls back a little bit higher low, and he looks to buy that third time up through that 90 level. When he gets in, he starts to trail his stop. You can see as the name moves higher through 90 up to 125. You see those arrows of where he's moving it. Originally, the stop was at 85. He moves it up then to break even at 90. Then he starts to trail it, as a profitable trade at 95, then under 100, and then we can see recently 105 has been holding. So he bought on the way up. He waited for a proper setup. He trailed his winner on, trailed versus the low of the day as the stock moved in his favor, and now it's setting up for the next pattern through this 115 that he now doesn't have to trade perfectly. He can just add in spots where it makes sense and have a proper stop. So this is actually a phenomenal trade. This is textbook and perfect. I think you can get. Anything else you want to add?
No, I mean, he nailed this trade. This is beauty.
Yeah, even though the breakdown of how he did it, it's very easy to follow along. Next, you want to pull up Heaven's Trade in this ENPH.
Woo. Pete.
So in this one, in this ENPH, again, I zoomed it in more so it's easier for the people looking, watching to follow along. Similar, process. He looked to buy up through 48. He trailed the stop versus the low a day. So that green circle, when he's buying up through 48, the first day his stop is at below 46, which was the low of the day. As the stock starts to move in his favor, he's upping his stop, and he gets shaken out that first, that second day move. But again, he's locking in profit. He keeps trailing it again. He gets stopped at again, as it pulls down to 56. And then finally, he exited the trade a few days ago, and again, it went higher. But again, this is where right now you're looking at it, and it's like, well, obviously, why wasn't his stop 53.89? Because it's very easy to look at it after the fact, and the trade looks so simple. But in the moment, just like for right now, this stop would be, let's leave it at 59.99. But what's to say tomorrow it ticks that, and the next day it's at 70. So these are some of those tricky parts where after the fact, it's very easy to see the good parts of the trade as well as the mistakes. But in the moment, you have to react with what's going on. You don't know what's going to happen the following day. But Heaven did a great job. I think he made like 15% of that trade. It was over a couple of days, so he did a great job at that one. Next, we got Roberto in this UNH.
All right, I got it up.
So this was one he actually took with him. I'll go over my trade a little bit later, but for his trade, we were buying up through that 280 off, versus that support. That's been a big theme of us lately. We've been buying up off of support versus trying to buy that resistance breakout. So he bought up off of support. He actually got stopped at a little bit of some today as it came back down, but it's still setting up that move to 300. But now he doesn't have to be that perfect buying 300 because he's got some stock. He's already booked some gains. So he's sitting with, a very, profitable swing that he's able to buy up off of support. Next, we got Tom Ramsey with his DraftKings. Shake if you can pull that one up.
Got it.
All right. So again, we can see the green circle where his entry was. If you follow that 1750 line across, you can see that it's been a prior resistance area. So a big focus of ours is when the stock is coming back up near a resistance level, that's when we're starting to look to get involved. And for him, he bought up through that 1750. He had a stop below the low of the day, and the stock just started to drift higher. In the last, less than a month, he's locked in so far 66% in this trade. When on his original risk, risking about $1 in this name, his risk was probably about 5%. So he's about 10-1 risk reward in this trade, and he still has some. So it's a great trade in that DraftKings. Next, we got Andy with this team.
All right, I can't really click this one, but let me just get it up on the chart.
All right.
How did Andy know to buy team?
I think he knew from the shakedown.
Ooh, smart fellow, that Andy.
But now, Shake, where did you buy team?
I didn't load up because this thing broke Monday morning, but I just bought through this high 157.25.
Okay.
And then
so the
first red day I kick some, and then I'm holding the rest I have with a stop below that pivot. So let's see how Andy traded it.
The one mistake that he spoke about in this trade was, like you said, you were buying like 157. His entry was 160, and that was simply because he was just late to the trade. Which, for us, that's a thing that we really do not want to, happen again. It's mistakes that happen, but it's things we want to avoid. So this time it worked out in his favor, but that was one of his main mistakes where he unfortunately didn't get the proper price he should have. But the trade traded higher, and now his stop is 179.99. So he's just trailing his winner. Just kept moving his stop up. And he's holding a great trade now. But that was a mistake that he was aware of, that he's learning from. And let's see. Next, we got Fabio. Look at his trade in this IRBT.
Ooh, iRobot, huh?
I think this is another one, Shake, that you called.
No, I didn't call this one.
No.
No, this is all him. This is a nice trade. I like this. All right, so, I'll explain the trade here. Earnings gaps up. Earnings flag to this beautiful level at 60. We see the horizontal resistance. And now when we see, even though the stock might be beaten up a little bit, when we see this type of earnings reaction and then we see it go sideways for a bit, what we can assume is that's a change of composure for the stock. The stock is more inclined now to break out of that downtrend because of the new news that we have on the name with their earnings, with how Wall Street's perceiving their earnings. So they flag out right in front of the 60 level. You just buy through this high, the 60 area, pretty much he sold some into strength, came down, consolidated, sold more into strength today. Did I nail that?
Yeah, he did.
All right.
And right now he's just trailing prior low day is his stop, and he's got about a third of his position left, which is great because now he can just sit and let it rock.
Great trade.
We got a few more. Okay, so next up is Nicholas with his Intel.
Oh yeah, sick job, Nick. Nice trade, Nick.
Yeah.
Good job, killing it.
Jake, why don't you tell him this trade? Walk us through the trade since you were in it.
Oh my God, I've been putting this fucking Intel in a body bag.
So you okay? Can you go on?
Get him a body bag! Yeah!
All right.
So, I mean, the Intel trade is very simple. So, when Intel came out with earnings, this day right here, at this point, they were gapping down 5% on the day. Now, if we look at the daily chart for this Intel, we can see that this is a massive support area, and this is the earnings day I'm talking about. So when we walk into the market and this thing is gapping down 5% on earnings, it's like, oh man, the Intel must have been shit. So then when we see that huge buying, we know that this becomes a massive support area. So we're just going to keep taking this trade until it tells us not to. It comes back, holds the support level. We loaded it here. We ended up selling some here. Came back a couple days ago. What was that, Thursday? And it was like, we added here probably 20 cents off the low. My new price is like 56.40 or something like that with a stop below 56. And I was selling today. And I'm sure, he had pretty much the same trade. I didn't take any off Friday. But, very similar trade. Coming down to huge support, looking for that buying to continue, putting some risk on, very tight risk. I had 40 cents risk here, and today we're selling for $2.50. Great trade. That's some money trading. If you can do that all your life, you can be a trader.
Next, we got Joe Park and his SYK. You want to pull that one up?
Yeah, I'm trying to see what it was. All right, I see what he's doing. Did he sell any?
He's still holding on.
All right, I see that. All right, so this 175 area, that becomes the support buy. This is the same trade as that Intel, just a different chart. Obviously, I get a lot more information with it held to 56 on earnings for that Intel, all those other things I was saying. But, if you're looking, it's very basically, he's in this channel, 175 to 195. We see the hammer. We see it hold that area the next day. And that's where he's getting long against that support area, and he's selling it to strength. And we're seeing this trade just be the huge winner of this market over and over and over again. If you try to buy today's highs and shit, you're not getting as rewarded. When you're buying when things look amazing, you're not getting as rewarded. There's things like this team are few and far between from the SYK. But this is more of the things we're seeing in this market. You got to buy the support buy. Once it holds that support level, it takes them off into strength. Now this thing looks really good, but now is the time to trim that. Start to trim.
Definitely agree with you on that one. And then if you want to pull up the next one, the last one of the member good trades was this. Mike Gallus also in this team.
Hey yo, did he get an earnings day?
So if you pull up the chart, he
bought earnings day. This is a fucking man's trade. I can talk about it easier on my.
Yeah, you can walk him through it.
So this was earnings day for team, and this was what made it make. Yeah, this is the candle that made me make it trade of the week. You can see off the open, it opens here, right here, this 150 area, and it pushes lower really quickly, and then it reverses higher, and then that's what made Mike get long, which is we saw that Friday, but I didn't have the stones to put the risk on because it was like, oh, it's Friday. I talked myself out of the trade. It's Friday. I don't want the risk, blah, blah, blah. The trade was there as we saw that Mike had it. But he bought that reversal right there with a stop probably below 146, and he had the best trade out of all of us in this team. So, he bought that earnings day. Then we're getting long. Oh, no, he didn't. I had that whole wrong. No, he didn't. He bought when we bought.
He bought through 154, added through 156.
Yeah.
And then he started to kick some up through 165 into 174. Last kick was 181, and then stopped out fully 174.
Yeah, I just thought he bought earnings day, and I was like, wow, that is very fucking impressive. But he bought when we did, so not as impressive.
All right, well, that wraps up the member good trades. Hopefully you guys got some info out of some of our Alpha Chat members, their own individual trades separate from our own. And now, Shake, if you want to maybe jump into some of your trades, good trade vouchers for the week, we can go over that, and then I'll go over mine after.
Yeah, for sure. I mean, we already went over mine for the most part. It's like I was just a seller today. I didn't buy anything with this gap up. I was very happy. I came with a chunk of stock long. It's funny because they said Jerome Powell was going to be on 60 Minutes like over the weekend, and I had so much stock long, and I'm just like, oh fuck! Like the first time I heard the news, I was just like, he's going to talk about how the economy's in the shitter. He's going to tank this market, all this stuff, and then the market ends up gapping up 3% because he's like, yeah, the Fed is just going to keep buying everything until vaccine comes out. But I mean, here's this Intel trade. We took it here. We're going to take it again here. I was selling the 60. I still have like a quarter of my stock left, but I'm not looking to buy the 60 at all. I want to be selling into this. I'm already making 5-1 on this trade. What else? I had some stuff written down here. Snap, same deal where it's like, you know, I just keep buying. I bought this the first time through 17. And I'm just getting so much information from the stock. I took some off at 18 because I know the real out is 15. So then it comes back again, test that area, that 1650 again. I rebuy. I take off into here, and then for a third time, same exact trade. And these names are making my month. I'm taking one trade, and then again Thursday, Friday, held that area again, and I sold into that 18 today. I still have about a quarter left of this one, but this one didn't have the follow through that the others had. What else? What was the last one? Intel. Oh, then that team we talked about a bunch, and then the big loser. I got fucking smoked in this light. This was trade of the week at this point right here. All right, so going into the trade, this was very, very tight right after earnings. We'd see this super tight wedge, and then so we have the macro trade here, and then if we look very closely, these 3 days, this is the earnings day. I love when stocks have a huge green earnings day reaction. In the next 3 days, we're tight inside days. So my thinking was, if I can get long over this inside day, just to get a little tight stop there, I have such a great risk reward on my hands. If this wants to explode to the high 90, 95, like we're seeing a lot of these semiconductors and chip type names do. So what happened was, this actually sets up the next day like perfectly. Gaps down a little bit, holds that low, and lets me absolutely load up against these lows, that little intraday low. And then the next day, we just had market weakness, and I got out with these new lows. That one just didn't work out. I loved how it's set up. I put myself in a position to make money. I had the macro lining up with the micro. So I can't be mad at this loss right here. I'm not mad at it at all. It's just like, I wish I risked as much I risked in this one as in the other ones, of course. But that's something maybe I could personally work on. What do you got for me, Bennett?
I think the few trades we'll go over, they're mainly just support buybacks. I sent you over the charts and drew them all out. If you want to pull up UNH first. This was one, let me know when you have it up.
UNH, we're up.
So this was similar to Roberto's trade. We both kind of took it together. I bought up a little bit later, though. I bought up through the prior day's high. Again, just trying to position to be ready for that 300 breakout. For now, it's just a break-even stop. I have a little bit under 290. So this is more than likely going to be like a wash or a break-even trade for me, just because my price wasn't that great off of support. But again, that's just, when we're taking all these support buybacks, they're not always going to work. They're not going to work amazingly. So when they don't, like in this example, I'm okay with losing, breaking even or making a little bit, just because not every single support back is going to work perfectly. The other ones that have worked well so far, Shake going to pull up the ZTS. That was another one that one of the guys was looking to buy through 132. This was one where I was watching to see how it reacted versus that 120. We can see, I believe that was on like Wednesday or Thursday, came down in, held it nicely, and I bought up through the prior day, that little doji high. So I bought up through 125. Stop was like 120-ish. And now it's banging on resistance where I don't have to buy up here. Now, if it wants to continue to flag out, they can by all means do that. If it wants to continue higher, I'll still be in. But now, for me, still my break-even stop is at the price I bought it at.
Here's just a common theme where we're seeing so much in all these trades. It's like we're buying when these things aren't looking like A+++. We're buying when it's like I need to see it hold this level so I can get some stock, and then I needed to do the work after. Whereas the newer guys are saying like, oh, the ZTS looks good at 133, where you're probably almost a net seller at this point at 133. like judging from the gap up, whatever it may be. But buying when things are looking ugly, but you're still seeing that rebound is what's really been paying in this market.
Yeah, 100, and that's even like those two social media questions. They were wanting to buy Nvidia at literally all-time highs ever.
All-time highs, yeah.
And then mRNA that is up 400 or 500% that
Yeah.
Carl's selling into. They're trying to buy when it looks absolutely amazing, and just like you said, we're trying to buy when it's third day down, buying back up, which is a little bit tougher of a trade.
Right.
And the newer trader who tries to do that does the opposite. They try to find the worst name, the Deltas or the Carnival Cruise Lines that are just down so low, and they just try to buy at that perfect price where, like you weren't trying to buy Intel below the support level.
I'd
you
say
were
hold first, and then that gave me the confidence to buy.
Yeah, so like even for ZTS, for example, if it got down to 120, I don't want it at 120
Right.
because it's probably going to head lower. That's where like a new trader who buys support waits like I'm buying 120, and then eventually time it gets there, but when it gets to 120, it goes to 100, and they get stuck in that trade, and it's like, well, now they're just hoping to sell back at 120 in a few months down the road. That's what creates resistance. The next one that's working actually pretty well. I've been I think Tom Ramsey's in this with me. This ABC.
I love this like macro ABC chart. Let me just show them real quick. ABC. Look at this level. Look at this beautiful. Oh, hold on a second. Oh, my alt button. Just an absolutely massive base forming since middle of 2018. All right, you're up.
Yep. So yeah, shaking myself. I've both been watching this name consistently, and we know that major level. And the thing we've been harping on is we're not trying to buy that resistance level being perfect. Where this name, 3 days prior was banging on 92. 3 days down, it has this little shakeout. She talked about earlier, shook out and closed. At the high of that day when it came down into that 81 area, I just simply put an 84.05 buy stop. So the following day, if the stock wanted to continue higher, I would be getting in automatically, which it did. And then coming in today, it gaps up, and now it's back up at the upper end of this range. Where again, me and Tom Ramsey are sitting pretty. We have a break-even stop at 84. If it wants to go tomorrow or the next day, we're in it. And if it doesn't, which it hasn't broken 92, this base has been setting up for 2 years now, we're still okay. We don't need to go, tomorrow to be profitable because we already got it, when it wasn't looking the best. So we're continuing to hammer in this theme that this buying off of support has been the move for us at least. And then rounding up the last one, we'll do this Triple M, which is a name that I've been kind of trading around and building a position in. Again, we had a few other members, and even some free members looking at that 150 level. For us, we got in a little bit earlier. We got in up through 140. Again, it ran up to 160. I didn't book any. It came back a little bit below my price, and I added back up after it still respected that 130, which was like that real out when I was getting in. And I was looking to, again, buy back up through 140. And this was one of the members' questions was if a stock gaps up above their entry price, like what do you do? And for me, for a name like Triple M, that I've already been in, I've been in it for a month or two now, and I've been building a position in, that 140.05 buy stop, when it triggered, it triggered me to like 143 today. So I bought up 3 points higher than I would have wanted to, but it was just showing me the name was in my favor. Now, if this name like Triple M was gapping up 10%, I wouldn't have been willing to buy it because a name like Triple M is not going to gap 10% and then go another 10. So when you learn the percentage moves in the names you're trading in, then you can kind of adjust like, okay, it's only up gapping up 1 or 2%. I'm okay with buying more, where if it's gapping up huge 10 or 20 in this type of name, then I'm probably not going to want to add more. But again, that just comes from your experience with the name and if you're willing to add more to it. And for me, I've been in it for a while and I didn't mind dollar cost averaging higher, and it's it's still working. So I don't have to buy 150. I still have stock in that that 140 range. So those are my main trades for that past weekend. Just buying up off support, and that's it. Keeping it very simple.
Try to sell that at some point. Fucking just gonna keep buying it forever.
Yeah, until we have to start buying breakouts again.
Yeah.
All right, so I think we got top of the week.
Surely. So I'm personally, again, I'm not buying anything tomorrow. I'm waiting until the market comes in a little bit. But this Spotify, this is like, I'm hawking this thing. This has such a nice base in this like 160 area. The market liked their earnings a lot, great subscriber growth. Everything's working in there. in their direction. So I'm just hawking this I'm trying to get some stock against this, 146, 147 area as a stop. Right now, I wouldn't mind this having a down day tomorrow for me to get some stock personally. But there are a few others. But right now, it's just tough to buy after the move we saw today. What are you looking at?
Yeah, I'm with you. Same thought process. If there was one thing that's on my radar, it would be this STZ through this 170. But again, this is not something that I want to buy 170 tomorrow. That would be the fourth day up. If this could hold under 170, kind of flag out a little bit longer, maybe hold in through 160 and then get back up there. That's when I'd be much more inclined to buy 170. I don't want to just buy 170 tomorrow because it's at 170.
Right.
So just like you, I think we need to consolidate, the move that we've been having these last couple of days.
Yeah. Something about this chart I'll point out is so why Bennett likes this chart especially is because this 170 area was a huge support area. Now it's a resistance area. If it can break through that area, it is most likely, from a technical analysis perspective, going to look to turn that 170 into new support in time. So that is the major appeal with that 170 level. Just to point that out. And from there, are we at Book of the Week?
Yeah, we're at the Book of the Week.
Hell yeah. All right, let's get into it.
All right, let's go. All right, Shake. So what are you reading this week for Book of the Week?
All right, Book of the Week. I got a book called Zen in the Markets, Confessions of a Samurai Trader, Edward Allan Topol. Really good book, really good, gets psychological aspects into it, and very good for the new trader. It's more geared towards, there's a lot of like position sizing, things like that aren't necessarily going to help me, but there are, moments where I was like, oh, okay, I could reinforce some principles reading this book. Any book that, combines trading psychology is usually worth a read or at least a glance over. So I'm only like halfway through this one. It's been pretty good so far, though. Zen in the Markets, Confessions of a Samurai Trader. All right, what do you got?
I got Grinding It Out by Ray Kroc. So if any of you guys ever saw
Ray Kroc.
the Netflix movie.
Is that McDonald's? McDonald's. I don't know. I was like, where do I remember the name?
Yeah. So most people have seen the movie on Netflix, and the main character, Ray Kroc, is kind of portrayed a little bit as like a villain. He kind of does like a dirty deal with the Mac brothers and like doesn't pay them out their royalties when they make like their deal. This book is like from Ray Kroc's point of view. Again, he passed away in the 80s, so it's not.
Yo, Bennett, you're the only person watching that movie like, oh, this Ray Kroc is a good guy.
No, I thought he went back on the handshake deal, but they portrayed him a little bit more negatively. This book again was written based off his autobiography, so it's a little bit more positive. All the millionaires hated, and but it's still pretty interesting to kind of get into the details of really, the little trials and tribulations. But it was a good book. Easy.
He was
read.
a legend. He was an absolute legend, business sense wise.
Yeah. So that's all we got this week, guys. Hopefully you guys all participate in this giveaway, and we'll give away some more free stuff next week.
All right, coming at you next week. Like, subscribe, do all those things. Till next time, folks.
See, this is the team.